One thing, just to begin, I prepped a chart for us that tries to put together some of the geopolitical tensions that we've seen versus some other moves in the markets. On the top panel is the VIX index, the fear gauge, if you will, and VIX shorts, according to CFTC data that was released on Friday, now at an all-time record. And when you contrast that with what you've seen in terms of the political uncertainty index or the policy uncertainty index, it looks like the market isn't really expressing that much concern over these events.
That's true. And then I would also argue that the real risk, the real geopolitical risk has actually moved out of this region and is actually now more in the Far East with Korea. But, you know, if you look at the geopolitical crises in the past, they would determine market corrections, severe market corrections. Even we can go back as far as the Cuba crisis, and then typically that would be a buying opportunity. So I think maybe the market is not convinced that the actors will push it, you know, to the extreme. This is so, I would say, in this part of the world. Andrew was hinting at that you know, there will be some discussions and agreements post this referendum. It's definitely also true in the Far East. The likelihood that they would go to a true conflict is still very low, and probably China is now gradually interfering in calming down Korea, and also with helping the US with sanctions. So I think that the markets are not expecting this to come to an extreme conflict situation.
Is there one of the, I mean, if you pulling it back to this region in terms of Iran and the referendum that we're going to see tomorrow, is there one of them that you think markets or maybe should take more seriously or should be focusing on more carefully?
To be honest, no. I don't think. I think that, you know, there is right now much more concern for what is happening in the Far East, and I think that what's happening right now, particular with the Kurdish region, is still, you know, sort of a horse trading situation. It's not a particularly. It's of course an important part of the oil production, but we have seen it in the past. We saw a couple of years ago when the Islamic State was conquering huge parts of Iraq and Syria. It didn't have an impact on the oil price. So I would suggest that the markets got used to that, and I do not think that here that this is going to be a major risk.
And does your calculus change come October 15th if Trump doesn't recertify JCPOA?
I think that even then, you know, we would need to see what happens and how this is being, discussed. The Congress would need to come in. I think that still then there would be, implications, ramifications, qualifications, just like we have seen for the climate change deal. They are out of it. And then we hear all sorts of discussions that they are sort of looking of how to adjust it. The US is a very important country. So if it pulls out of something, out of a framework, a global framework, that framework will start adjusting. But somehow the US will also understand that it needs to remain involved. So I do not think that this will immediately change everything, no.